bring up that chart about the technical resistance that these Philippine stocks are facing here right now. Yes, it seems like it's likely that we'll enter a bull market again for the market, but what's it going to take to actually break above those levels and some of these resistance levels that we're seeing?
Well, thanks, Yvonne. It will take a very strong fundamental growth story to bring the market to new heights, and I think that's exactly what we have. Most importantly, if you based on the demand we're seeing on the ground, domestic-driven demand, we're actually getting strong indications that and it makes a lot of sense for core corporate earnings to grow by double digits over the next 3 years. At least over the next 3 years. In the first quarter this year, you already saw net income growth at about 14%, core income growth at about 9 to 10%. But we think that there is growth momentum being generated, and it's very visible in certain sectors in the economy. So earnings growth will grow double-digit over the next 3 years. That's our estimate. And then you have this supported by a very strong economy, strong domestic-driven, consumption-driven economy that is going to enjoy lower interest rates and is on the brink of a massive infrastructure spending program by the government. So that plus low levels of foreign ownership levels have dropped significantly compared to the early part of the decade. And you also have valuations. I think David was talking about valuations earlier. The chart actually shows you that you're at the trough. I mean, that you're at levels where the Philippines was, I think, before we actually got upgraded to investment grade, and a lot's happened since then. So those fundamental factors support our view. I think that the market should reach 10,000 by year 2021, and I don't think we're the only ones sharing this optimism. If you look at corporate action. The big conglomerates, the big listed companies are actually increasing capex spending. Capital expenditures are up by a whopping 77% over the last 3 years. Aside from that, you
Julian,
also see corporate buybacks up 4 times over the same period of time.
Yeah, you mentioned about how double-digit earnings growth. Break it down for us. You mentioned a little bit about the infrastructure stocks, but which sectors actually look the strongest to you?
Real estate looks still very strong. Banks look strong. Construction and industrials look very strong. Consumer, obviously, we anticipate big things. Even the telecommunications companies, which have been growing by 3 to 5% in the past, are now growing double digits. So I think that's a pretty strong core group of industries. Main industries that are growing significantly and will continue to do so over the succeeding years.
Julian, absolutely. I mean, this is a construction 25%. That's your sectoral breakdown. Financials 8%. Property, that includes real estate. So it's an infrastructure play, effectively, is what you are actually doing at the moment. And some of your companies, I mean, just looking at your top holdings, you've got EEI Corporation up 37% year to date. Eagle Cement. That's one of your worst performers, not even up 1%, they're flat. But otherwise, it's been absolutely remarkable. Mega World, 28% growth. We've got also at the same time, DM Wenceslas, up 26%. It is quite something, but the point being, has this run up for these companies, actually, in your view, perhaps just got ahead of itself a bit?
Sorry, I didn't hear the
I'm saying that the run-up of these companies, I was just mentioning some of your real estate and infrastructure-related holdings, and you know how much they have been actually growing, typically, you know, 37% in the case of EEI Corporation, etc. Now, the point being, this move so far since the start of the year has been so big. Do you expect there to be a bit of a breather?
Can't tell you about the timing, but I can't tell you where it's going to be in the short term, but over the long term, it's still trading. Those companies are still trading way below at steep discounts to intrinsic values, our intrinsic value estimates, and I would think assuming very prudent order book assumptions for EEI, for example. EEI is will be benefit from the Metro Manila subway project, and that will only serve to expand its order book, which is at a record high. All the more, those other companies you mentioned are also primed to grow very fast. The common thread with all of these companies is that it's not rocket science. We're simply investing in the fastest growing companies in the market based on our long-term projections.
Yeah, you also like pizza. And is pizza going to be a big thing? Shakeys Pizza is a 7.7% holding and is up 18% year to date. I should add they also have chicken on their menu.
Yes, we like our pizza. It's a very iconic brand, very high return on equity. And it's only in the big early stages of regional, its expansion outside of the capital, outside of Metro Manila. And that we think will provide a further boost in terms of core earnings and share price appreciation, shareholder value creation.
And Julie, before we let you go, I'm just wondering, given the forecast and how bullish you are, how much is that contingent on whether we're going to see a budget in the second half?
I think the budget's already been approved, Yvonne, and spending is going to accelerate in the second half, whether it's the third quarter or the fourth quarter. The big ticket projects have been awarded. The overseas development assistance projects are on the way, on the brink. I actually live very near to one. It's not a PowerPoint presentation anymore. It's not anecdotal evidence anymore. We're seeing shovels in the ground. We're seeing people building stuff already. It's real and it's happening. So yeah, just excited for bigger and better things for the Philippine economy.